Talk us through your call, and given we're at 153 today, why do you see the yen weakening again from here?
Oh, well, thank you. And first of all, I should emphasize that the yen forecast was an RBC team effort. But in terms of our yen forecast, we remain, relatively negative on the yen. And I say relatively because certainly there's been significant intervention year to date. But we think that given the rate differential between the US dollar and the Japanese yen, the dollar yen is likely to move up from here again. And in fact, retest the 160 level as a baseline forecast. And the risk indeed is that it breaks through that and goes higher to 165, to new highs basically of the cycle. And fundamentally, it boils down to the rate differential between the United States and Japan, which remains tremendously wide.
So then we're of course not 100% certain yet, but certainly the moves last week had the hallmarks of intervention. Do you see the impact of that really just, I guess, dissipating quite quickly?
I think the impact of the interventions will dissipate quite quickly if indeed U.S. interest rates do not continue to drop from here. So quite apart from the interventions we had last week, well, suspected interventions, there's also the very important fact that U.S. interest rates fell quite a bit last week. I mean, the two-year yield, for example, dropped like 20 basis points from last Tuesday into Friday. So that definitely supported the general weakness in the US dollar and also, of course, particularly the drop in dollar yen. So long as US interest rates can find some support around here, which we think it should, then I think we'll find dollar yen stabilizing at these levels in the low 150s and then eventually creep back towards the 160 level.
We had sort of a note of caution from Janet Yellen talking about currency intervention, and clearly we've seen that from Japanese authorities. Do you think this is going to become a point of contention going forward?
I think at this point, actually, the intervention in the yen, well, suspected interventions in the yen that we saw last week is probably justified because there was increasing volatility in the move to the upside. From about 2 weeks ago. It was trading 155 2 Thursdays ago and was trading above 160 last Monday quite suddenly. So I think that volatility surge, does justify some intervention. But certainly, if Tokyo continues to perhaps intervene from here and try to push it down well into the 140s, I think it could create some tension in terms of this economic policy making with Washington. And as you mentioned, I think Yellen made it quite clear that Washington has not signed up to this intervention by Tokyo.